Hi folks, Berk here. This past week's stock market was intensely volatile with dramatic swings, but it ended surprisingly strong. Let's review exactly what happened and what it means for your investments. First up, the trade war intensified dramatically. President Trump raised tariffs sharply on Chinese imports, prompting China to retaliate with a 34% tariff on all U.S. goods. On April 7th, panic briefly pushed the S&P 500 into bear market territory. But wait, markets quickly reversed after Trump paused tariffs on non-Chinese countries, triggering a midweek rally. Economic data painted a mixed picture. Good news, inflation pressures eased as producer prices dropped 0.4% in March. However, caution remains. Long-term inflation expectations rose to 4.4%, and consumer sentiment plunged to its lowest since June 2022. While the labor market held steady, the Atlanta Fed improved its GDP forecast slightly, though it's still negative at 2.3%. Amidst this volatility, markets delivered impressive gains. In fact, on April 9th, the S&P 500 soared 9.5%, marking its third largest daily gain since 2008. This is a reminder of how swiftly sentiment can shift. This week, JPMorgan Chase beat expectations, but CEO Jamie Dimon warned of a potential recession by Q3. Wells Fargo earnings rose 16% year over year. Morgan Stanley also exceeded forecasts, though caution remains about trade disputes. BlackRock impressed with record assets under management. Let's quickly touch on some major movers. American Express rose 1.7%, upgraded to buy, despite a lowered price target. Tesla took another hit, down 8% last week and 40% year to date, reflecting lowered earnings estimates. Nvidia dropped significantly, down 27% for the year, but analysts remain optimistic, betting on a rebound driven by AI growth. Corporate leaders expressed cautious views. Larry Fink of BlackRock indicated the economy might already be in recession, highlighting client anxiety. Jamie Dimon from JPMorgan warned that tariffs will likely increase prices and slow growth. Charlie Scharf of Wells Fargo echoed this uncertainty, emphasizing preparedness for a slower economy. Analysts now predict lower earnings growth for the S&P 500 this quarter, dropping forecasts to 8% from 12.2% earlier. What's next? Keep your eyes peeled on these critical areas. Additional trade developments and tariff impacts. Corporate earnings guidance that reflects tariff concerns, upcoming economic data for signs of recession. Federal Reserve policy moves, with odds of a May rate cut diminishing. Stay informed, stay vigilant, and remember, opportunities often follow volatility. Subscribe and stay updated.